U.S. equities markets are taking a pause from the most recent bullish run a day after the NASDAQ 100 breaks new all-time highs, and the currency markets are watching a move into safety ahead of the Easter holiday and long weekend ahead. Welcome to the MTI Minute. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. I'll tell you what, it's been one heck of an eventful week. We've been striking targets better than a bid pattern target trader. As a matter of fact, we're seeing a lot of action across our commodity currencies, as I was explaining all week. And you know what I like to say, let's let the charts do the talking as we head into the spiders, the SPY, the broader market here. Like I said, we're taking a couple days off. This is reconsolidation before reaching and making new all-time highs. And believe me, we're going to do that. We're not up here just to take a selfie and jump off the side of the cliff. Here is the diamonds, the DIA. See, look at this. We got a doji on the day. We've had a lot of earnings affecting and impacting the bottom line to hold the Dow back a little bit. But 269.27, mark my word, that is the high. That is the all-time high on the Dow Industrial Average. We're going to watch that get cracked here within the next few weeks. Probably earnings are going to be some of the catalysts for this. The NASDAQ 100 cracking new all-time highs yesterday, taking a bit of a breather on the day. Maybe even on Monday we may see a little bit of light action going on there. But as tomorrow the stock markets are closed, where we close today is where we close the week, really. That's what I'd like to tell you there. Here's the IWM, the Russell 2000. Now you're going to see some big bearish candlesticks here because the Russell 2000 is a very aggressive small cap index. And the healthcare sector has been getting the kibosh over the last several weeks. Matter of fact, Merck is down 10% within just the last 6 trading sessions. I'll show you how I lost Merck here in just a little bit because I do take losses from time to time. When the market makes me do it, the market made me do it. But then here again, the Russell 2000 has got a lot of healthcare biotech companies composed of it. So this is why the Russell was down 1% at one point yesterday, in contrast to the NASDAQ cracking all-time highs. Back into those charts on IWM, and we're going to go ahead and take a look at XHB because we've got some new developments on our home builder front. Now, I've been on the pedestal about this for the last few weeks, and if you think I'm kidding, let's let these charts do the talking for you right now as we jump into our home builders, because today is payday on D.R. Horton. Yes, indeed. So about a week ago, we got long the $41 call strike. Now remember, I told you that home builders, this is seasonal consensus trading. It doesn't really matter whether the markets are going up or going down because we're looking for these to go up regardless of which way the traffic is going. And sure enough, we hit our first target on D.R. Horton in a little bit over a week. So book it if you took it, heading back into those charts on Horton, who got a who. Now what? We're talking some Pulte Homes. This is the other one that's getting close to target. Now, I'm particularly concerned about Pulte Homes because we are in the grip of earnings season. Pulte reports on Tuesday. So I'd like to go ahead and hit my target of $30.45. We may actually be able to get there. Today's high is $30.39, within 6 cents of my first target. So what I like to do is take some coin off the table and start reaching for target 2. Tri-Point Homes above the $14 level here as well. So we've got a lot of setups kicking. Toll Brothers kicked a few days ago, and that's up a buck. And KB Home is not quite there yet. I want to make this one do more. It's going to have to jump through more hoops before it wins the pony show. Now, of course, cause and effect. This brings us into our retail group where we're following along with Home Depot. Home Depot getting ready to crack some new 52-week highs for us here below the 208 level. Our current target to 214 on that turkey burger. Been talking fast and all, and it's fast and all, hitting 52-week highs the last 2 trading sessions, including today, above the 70-60 mark. Here's Costco. Costco actually hitting 52-week highs on the day. And you can see this is all relative to home builders. Tractor Supply, because who doesn't have a tractor when you got a home, right? And then, of course, Lowe's. Now, Lowe's, some pinhead went around and started saying something negative about Lowe's right after we get into our calls here about a week ago. So we're above the 113.07 check engine light. No cause for concern, but definitely making us feel low about the lows. Why don't we talk a little bit of commodity currencies here on the day, because this is what's really been moving the dial. My job as a trader is to recognize basket strength and basket weakness. The weakest basket on the dial today is the Kiwi. We're talking some New Zealand dollar. So as I'm hopping into this chart, it's paired against a strong currency, the US dollar. Remember I said at the beginning of the conversation, US dollar, Japanese yen, safe haven currencies, the US dollar futures up 0.4 as we're heading into lunchtime on Wall Street. The yen is up a little bit, but still this is a slight move into safety. Now it's at this point I want to talk to you a real moment about tomorrow. Tomorrow is Good Friday. First of all, I hope you and your family enjoy a very happy Easter and have a good Friday. But the markets are closed tomorrow in the United States. The Dow Jones, the New York Stock Exchange closed for business. There'll be no trading. The Forex markets, The banks are closed. Banks make liquidity in the Forex market. If you're trading Forex tomorrow and you're trying to scalp, the conditions you're going to be scalping in are higher spreads. And look, just don't do it. It's going to be ridiculified, really. The spreads are going to be wider. There could be some big sporadic price movements. So as a day trader, this is a big threat. This is dangerous. Now, the brokerages will be open because the brokers are always willing to take money from somebody who doesn't know an illiquid marketplace. And the market maker is more than happy to raise the spread on you when there's nobody moving. So watch out for flat lines on the charts because the Australian government, the AUD, the NZD, they're starting their Good Friday today in the evening during the Asian session, less liquidity. The UK, the EU zone, the Eurozone, the Swiss, Canadians, United States, all banks are closed. So watch out for less liquidity. Again, if you realize that you have a problem, the first thing you have to do is admit that you have a problem. I can't stop trading. I can't stop chasing these lights. Heading back into the charts on the Kiwi, New Zealand dollar, New Zealand von Donkenstein. Now, it's not the biggest mover, but there's a lot of things that are up here against support. And this is what's brilliant and beautiful. Look at that. The two Bs, brilliant and beautiful. This is the pound New Zealand. The pound is not trading that strong, but when paired with a weak New Zealand dollar, you do get the dial to move. Now I'm waiting for this to start really breaking out above $1.95, and it looks to me like that could very well be the condition the situation rolls into. Now here is the Euro New Zealand, and I'm walking on this on a 4-hour chart. We had a big move the other day. If you remember that 200 pip move in 1 minute I showed you yesterday, consolidating here, I'm looking at this to break above $1.6860. Otherwise, I'm going to start feeling like I want to be a contrarian there and short this monkey to zero. Now, at this point, New Zealand CAD, you've got commodity currencies battling against each other. The New Zealand dollar is weaker here, which is why it drops 10 to 15 pips. But that's not really going to move the dial because, again, two weak instruments. You want to pair a weak instrument with a strong instrument, like a weak New Zealand dollar to a strong yen. Now you've got price action down 63 pips from the open to the close, and the total range of 71 here on the day. Now, it's been all about the commodities, but there was a little bit of selling here in the Eurozone as we hosted quite a bit of fundamental noise announcements, kind of had the euro a bit on the sell against the greenback. At this point, we're starting to see that kind of quell off as we're heading into the 10:45 to noon mark. This is where we're closing out the London markets. We may be very well watching liquidity dry up here into the afternoon. Euro CAD, once again, another choppy week there, down 36 the day. And the Euro New Zealand, I'm going to keep it on commodities all the way. Euro New Zealand, like we talked about a moment ago on the gain side. And this is the lovely Euro Aussie. Euro Aussie sitting right above $1.57. Look at all these wicks down there. See all the wicks? These are like tree stumps, not breaking below. That's telling us that $1.57 is a really big support level. So I want to see what happens in interactions. I know we've broken through it a few, but it looks like if it breaks down through there, we could be taking this down to the next leg of a short. So it's been a very eventful week, and as we're heading into next week is just going to be a normal week as we're starting to finish off. But earnings season, we're going to have about 400 companies reporting next week. The following week, we're going to have about 700 or 800 companies. So there is just going to be a big fat range of opportunity, a big range of volatility coming on. Remember, volatility is the friend of the day trader. But if you're a swing trader, make sure you do your homework like I did on Pulte Home so you don't get caught looking. Now, before I go, one more thing, back into the charts. Forgot to mention, I talked to you a moment ago about Merck, and I didn't follow through to show you what happened here. Now, Merck we did take a loss on, but I want to explain why. You know, this is exactly what it's all about. So when you take a loss, it's because you have hit an area where you are no longer willing to take risk in the trade. Now I've already lined this up, showed you it's red, 79.66 just last week. And this trade was winning too. But just last week, we hit our check engine light, April 12th, not quite a week ago. And look at this cascade. I took a loss here on the 16th when I got to 78.02, a little bit above 78.02 is when we skated out. But the reason you take a loss is so you don't lose more. I would have lost another 8 to 9%, but not following my plan. So to be a successful trader, follow your plan. Losses are going to happen because you can't control when somebody across the pond says something stupid to move the dial. But what you can control is your emotions and not taking a maximum loss and returning some of your trading capital to use it again on a more successful trade. Now, thanks a lot for all the likes and shares. If you have any questions that you want me to answer, just go type it in to the box below and I'll be sure to take a look at it. And click the link if you want to get into some of my classes and join me on Opening Bell so I can show you how to make this a habit every day. I'm in it to win it on the MTI Minute. This is Kevin Dixon. Thanks again for tuning in. We will see you next time.